Today we are meeting Naveen Venkat. Naveen grew up in a small village in Karnataka and later moved to Bangalore, where he spent nearly 20 years working in the IT and service industry. Over the years, he's been steadily working towards financial freedom. In this conversation, we talk about his net worth, the lessons he learned from the markets, and the journey that shaped his approach towards money. It's a conversation filled with insights about both money and life. So let's get started. So, what does your net worth look like right now? And again, what is your asset allocation? currently?
My overall net worth is little over 6 plus CR.
Okay.
And at the same time, I'm around 65% on real estate. I'm slightly heavy, I know that. And at the 30-35 would be around capital markets. Within capital markets, I'm very clear. I am at 65% mutual funds, 35% on stocks.
Okay.
Of that remaining 5%, I'm on the bitcoins, 2% and 2% on stable bonds.
Right.
So bonds is again something I'm okay because I'm not betting too much beyond 2%. But the bitcoins and other things not more than 2%.
Okay.
I want to build a portfolio because look, world is heading at a certain direction. I want to be aligned. I don't foresee things changing for Bitcoin in the near past. At least there's going to be another hedging currency probably very soon. We just don't know. So I want to make sure I'm aligned and my portfolio is aligned to Bitcoins as well, right? So I have a small portfolio which I'm trying to build. This 2%, I'm looking at making it 5% probably in next 3 years. I don't want to hurry up, right? And this is something I usually tell my clients to don't rush to make money.
Yeah.
Money will just come and follow you as long as you're putting it in the right assets with your right allocation and so on, right?
Yeah.
So there is a client, I can just share an example, and this person actually want to go completely on Bitcoins because he people keep saying videos these days and so on, and they just get
very
it,
hyped up right now.
they just get inspired with that. So I said, look, this is what I have seen in my portfolio. Do you still want to try? Right? And technically in COVID times, my portfolio went down like close to minus 38%.
Oh wow.
Right? So that was a time when I realized, okay, one asset can also perform like this. Right?
Exactly.
Luckily, COVID probably I didn't have like really big allocation to capital markets, but my conviction in markets today is very different than what it was in 2020,
I'm
right?
sure,
So
yeah.
today, I mean, honestly speaking, today I want markets to correct because if I look at a PE ratio, we are trending around 20 to 23, right? Is it healthy? Maybe, may not be. But I am looking at making another entry when it's around 18 to 19,
Yeah.
which is a good proportion to enter, I feel. Will it happen? Maybe, right? And I can just share one more example.
Yeah.
For all my clients, I'm making sure 20% stays in debt bonds.
And why is that?
Okay, let's say Shagun comes to me tomorrow and you're investing, let's say 1 CR, 20% of that stays in debt market so that whenever the equity market's correct, I'm telling them very clearly, I'm going to move that to equity market so that you're buying at a 20% cheaper,
Got it.
right? When would that happen? Nobody knows, right? So I think we just need to wait and watch, right? But the point is, am I taking that decision at the right time? Look, when I said 20, it might be 25, we don't know,
Yeah.
right? It might be even 19. But the point is, am I making that entry at 19, right? So that's where I think people really miss out the bus, and I have also done the same mistake. So today I'm very clear in my framework when I want to enter, when I want to exit.
Right.
Simple.
And as your corpus grew, what was the changes that you observed in your spending habits? Did you start, let's say, buying more luxury items? So was there lifestyle inflation that kicked in? So what was that change like?
Wonderful question. I probably want to answer this slightly different. I don't know how many of people who are watching this video will accept. For me, car is an emotional asset.
Okay.
It's an asset. It's not a liability,
Liability.
right? Because I'm a traveler, right? So when I'm traveling, I have that great bonding with the car, right? Sometimes I feel I'm actually talking to the car,
Yeah.
right? So I've never looked at car as a liability. I've always looked at it as an asset. It's how do I say? It's an emotional asset for me, right?
So which car do you have then?
I have recently upgraded to Safari.
Okay.
I
Wow.
started my life with Wagoner, and then I moved to Ertiga, and recently with Safari. But I have thought really 100 times, hey, is this investment really worth? It's got an expensive one,
Yeah.
worth at my portfolio. But I felt, look, if not now, you just can't do it ever, right? So I felt, yeah, I have to do it. So look, end of the day, I think we all can drive cars probably till you're 60, 65, not beyond that, right? So you got to make a point when you want to enter a certain premium car, whenever you feel decide right thing for you with your portfolio. I think that's a decision I made. So my lifestyle biggest uptake would be my car recently.
Okay.
Otherwise, I've been a very conservative, a conservative spender, I would say. We are very, very clear in terms of how much we want to spend on our groceries, on our insurances, on our my existing EMIs and so on. So I'm being very clear. And the good habit that we also very clearly maintain is we account every single rupee.
Wow.
So for me, this is one thing I learned with HP. A penny saved, sorry, a penny saved is a penny earned, right?
Right.
So whether it's 1 rupee or 10 rupees, I still want to be accounted for, right?
Makes sense.
And I mean, that's how my spend habits has been. Otherwise, we have been very clear in terms of our spends. Yeah.
No, I think I also agree because I also write down every expense. I have this random app that I installed and I track every expense that I make and I categorize them into buckets and I've set budgets for myself.
Okay.
So I think I also started
Awesome.
practicing
That's
that.
good.
Yeah. And this is very interesting when you mentioned that you bought the car. So what was your financing process like? Did you take out a loan or did you again redeem your portfolio, some units, a mutual fund? What was that like?
I probably want to touch upon on the other bit of finances too. So till date, I have taken like 9 loans.
Oh.
My car is my 10th loan. Okay. And like everything I track, yeah, there are loans I have taken. I mean, all 3 cars again on loans. Nothing that I had like hard cash to pay it off. And at the same time, all the 9 loans I have taken have also gone into a sizable real estate investments too.
Okay.
Right? Which is a good thing, which I think I have also done it to an extent, because in India, what I have also seen is your real estate investments doesn't give you more than 3 to 4%, right? At the max, commercial spaces can give you like 5 to 6, right? So not more than that. So yeah, when I started my journey with investments, I was not while I was exposed to markets, I was not understanding markets as much as probably I do today, right? So I think we all learn, irrespective of whatever journey, whatever number of years of experience in the market.
Right.
Market teaches you every day.
It does.
Simple, right? So that way, I think I'm highly focused on how I want to spend it out. Yeah.
Okay, so we'll talk about the real estate part in a bit, but I'd like to talk to you about what your paying off strategy is like, because I think most middle class Indians end up taking loans.
Correct.
And if you can come up with a framework that you use to waive off your loans, I'd be really interested.
Yeah. So a couple of things. I mean, thanks to my dad for taking some right decisions when he was absolutely working.
Right.
We didn't have to pay too much of a rent because we started moving to our own house, and that gave us some cushion to play with, not pay rent as such, right?
Okay.
That also gave me some additional push to start doing a real estate investment. And when I took like my first loan, I was pretty much into buying, let's say, smaller sites, right? In Bangalore, we call it at like 1,200 SFT, right?
Okay.
And probably keep them, let's say, in a year or two, and you see a certain amount of appreciation, just sell it off, and then maybe enter something else, right?
Okay.
That's what my journey was probably in first 5 to 6 years. And then I realized, hey, okay, I'm buying something, I'm selling something, but what am I holding on to?
Yeah.
So probably thoda bulb jalega na, let's say. So that's when I realized, okay, I'm making money, but at what cost?
Yeah.
Right? And so that's when I said, let's look at some rentals, right?
Okay.
And I mean, I have to thank my wife for it, because I was not into this concept of, hey, rentals and all that, but she was actually saying, okay, I think it makes sense.
Yeah.
So we looked at one specific property which gave us like close to 3 to 4% returns on an average. So what happened is, one, I'm earning, and I'm also sort of taking care of my family, and whatever my rentals and my savings, that move towards EMIs.
Okay.
And whenever, let's say, I'm getting my bonuses and other stuff, start paying towards your principal, right?
Understood.
I think that helped me to a larger extent to start clearing one loan, maybe go to a second property, probably sell this off, and then hold on to something that you really want to hold it off. Yes, I mean, there were quite a few mistakes I have also done in my life in terms of real estate. And honestly, it's not easy, Shagun. I'm sure you agree. Everybody agrees with that. It's an asset class that you need a lot of muscle power at times.
Exactly.
Right? Which, as someone coming from an IT background, I don't know how much you can really do that at times, right? So, so my framework would be more like, whatever additional streams that you have, start paying it towards your principal. That helps you cut down a lot, right? And then the second thing is, see, a lot of times people say more than 2 to 3% real estate return on investment is not so great. But what we also need to understand is your real estate gets equated every fifth year. What it basically means is the rentals keep increasing. At the same time, the good thing is your EMIs stay constant.
Yeah.
Let's say I have taken loan in 2025, I'm paying a 1 lakh EMI. My EMI is still the same in 2030, but my rental would have actually gone up
Right.
certain levels,
Yeah,
right?
like generally a 10 or 5%
Right.
incremental.
It keeps unless something like COVID doesn't happen, right?
Hmm.
So otherwise we are good. So I think every fifth year it translates a bit, and every 10th year it's almost comes up to 1.5x. And this is something I've done a math with all my real estate investments. That's how it plays out to be, right?
Okay.
And yeah, you might go wrong at certain investments. I mean, we just can't be right in everything that we make. So I think that would be my framework in terms of repaying it off, right?
Understood.
Yeah, yeah.
So in 2020, your corpus was roughly 1 crore and now it's 6 crore. In the last 4 or 5 years, I want to understand which part of your corpus really made this big jump possible. So which one gave you the highest returns?
So in last 5 years, right? So my corpus probably has doubled up. It's like 2x of the capital markets. I usually follow 80-20 model.
Okay.
What it basically means is 20% of companies in one industry takes care of 80% of your overall journey. Right, and it's mathematically proven, statistically it's there. So I have looked at those particular companies, and I didn't mind liquidating some of my real estate small investments and started moving them here, right?
Okay.
So I think my SIPs have also gone like close to 1 lakh a month.
Now.
Yeah, as of now, and I've been doing that slightly consistently, at least in last 2+ years. So ever since my SIPs have increased to a sizable number, Shagun, I think that's what is making this jump, right? And technically, all of us are agreeing that 2020 to 2025 markets have given easy 18%. Simple, right? Which means technically anybody adding their money around this time frame is a good run, right? Having said that, my portfolio is also not done well in last 1 year,
Because the markets
are not good, right? So, and I understand that. And like I said, I want a correction to happen so that there are some more entries which are happening in the market, right? And I think today people are accepting SIPs as another form of EMIs, which I love it.
Yeah.
Right. So thanks to all the social media, people are really believing in it, right? So, and unless you have a smaller corrections into markets and where people are seeing their money grow at a certain percentage, the conviction really happens more, right? And I mean, I was just talking to another client. I can just share this example where he said, "I'm happy if your portfolio is not growing for next 2 years, because the jump comes only after second year.
Yeah.
I'm not happy if your portfolio is doing like whatever 10+% this year and next year it corrects and you're like, hey Naveen, where did I land up?" Right? So it's okay for anybody's portfolio to be not performing and and then takes a jump, which I think is a good one. And let me just share one example as well. Real estate doesn't have an NAV. Your mutual fund has an NAV. Your stock has a price, right? I think you'll realize the problem with real estate only when you go and liquidate it, only when you go and sell it, right? Because you might say, hey, my real estate worth is like 5 crores, but you don't know, is that really 5 CR, right? For example, I might say 4 crores on the back of my mind, but it might be only 3 crores. I just can't put a number against it, right? So that liquidity option, I have started to believe in markets very strongly post COVID.
And so you invest 1 lakh into the markets, that's your SIP. So is that strictly only for mutual funds, or do you also do an SIP in stocks?
So two things, right? So one, I have started to believe in mutual funds slightly more. I'll tell you why. So while I might claim I'm an intelligent guy on the earth and I have stocks portfolio, I have mutual fund portfolio. If I just copy them and say, how do they perform? I'm thinking, I mean, I see my mutual fund probably does a better job than what I have done, right? And when I went back and researched, look, there is a dedicated fund manager.
Yeah.
Fine, if you're paying him 2% doesn't really matter, but he's doing his job right, right? And I need to focus on what my job is, right? So that's where I get more conviction. Having said that, I'm still wanting to be aligned to stock markets and so on for long. I still do my analysis, which stock is getting corrected.
Right.
And somebody who wants to really take a plunge, just do this, go back and work with Nifty 50 stocks, which are correcting 50 DMA. right? Simple entry you can make. And by the way, you got to even look at your support and resistance levels, which is, I think, very crucial. But when you're entering something at a 50-day moving average, it's a sizable entry to make, right? So I think that's how I usually make a design. Yeah.
Understood. And I'd like to talk about your income progression so far. Can we talk about what the first salary was, how that progressed over the last few years, and outside of your active income, do you have passive income streams as well?
And I've been a services guy for last 20 plus years. So I was with Dell to start with. I mean, prior to Dell, I was actually assembling small tape recorders. I don't even know if you have seen it today.
I mean, I haven't used one.
Yeah, I'm sure you
I've
have
seen
seen
them
it,
for sure.
right? But every tape recorder I assemble, you get a small paycheck, right?
Okay.
And back then, a tape recorder would cost you like $1,500, right?
Oh.
And from there, when I jumped to Dell, I mean, I did that for like an intern, small, right? So post 3 months, when I jumped to Dell, my first salary was like 8,000 rupees.
Okay.
For me, that was like, oh my God, what do I do with this money? Because it was valued
a big
at
jump
that
to-
money
yeah.
back then. I think after that, when I started moving to, so Dell and HP were more like, services companies. And then I moved into product companies. That's what helped me to, sort of move my momentum on that. Yeah.
Okay. And do you have any other passive income stream?
Yeah, sorry, I missed that. So my other source of incomes would be from a rental.
Okay.
I have two little small properties where I make like close to a little over a lakh, on rental. And since I'm also on bonds, which is like close to 2% of my portfolio, that usually generates a decent amount of returns, right? And then for anything which is like less than 3 years, I usually put it in an FD, which I think is a fair one, right? You can also do debt funds. That helps you from a taxation point of view.
Yeah.
But yeah, I do a combination of both debt and FDs. FDs may be very less, and maybe these days debt funds help a lot, right? Because you just get your money back in like 2 days.
Okay, so now I have a couple of questions for you, and I want you to answer to them in two ways. So you can either agree to those statements or disagree, and then you can tell me why you have that opinion. Do you think that real estate is safer than stocks? So you agree or you disagree?
Yes.
You agree.
Yes.
Okay. And why
Okay.
is that?
But it has a time cycle, right? If you are time testing your real estate for longer horizon, they're definitely good, right? But if you're not time testing it, you're sticking onto them, let's say 1 to 2 years, just like capital markets, it has its own risks attached to it, right? See, the biggest criteria I have always seen in real estate is your entry and exit, which is not easy, right? Today, I'm telling you, if I want to dispose my real estate assets, it's going to take 1 year.
Of course.
Let's say I need whatever, 50 lakhs money, it's not easy to get it, right? Whereas I can just do that in capital markets, even if I'm even if I'm at loss, I'm okay with that. And I'm not being taxed too.
Yeah.
Why do I worry, right? So I think that would be my answer to it.
Okay. You need high income to invest.
Not necessary. You need a better plan to invest, right?
Okay.
And a strong conviction with a good mentor to invest, right? I have seen a couple of my friends, of course, I didn't do as good as them in terms of investments back then. Had I stayed invested from 2001, whenever I started, probably my corpus would have been X numbers, more than my real estate returns, right? I didn't do that, right? So for you, it's not necessary. Yes, high income always gives you that leverage. I'm not saying no to it, but if you're sticking on to a plan X number of years and the X number of years is greater than 10 years, I think it's good. You're still able to make a sizable number.
Right.
So there are different formulas, right? 15, 15, 15.
Yeah.
So I think if you're sticking on to that, you're able to make that once year corpus anyways, right? So why worry? Yeah, you're earning more. Of course, your reach to that goal becomes faster. Otherwise, and let me ask you this, Shagun. I have seen a lot of my folks in IT who are probably earning in lakhs. They're still not maybe able to touch once a year because of their different habits which they carry along, right? So that they could be spend habits, whatever XYZ, and nothing is good or bad. But it's all about that sticking onto that market.
Yeah. Funnily enough, one of my questions was going to be this: that does more funds equal more safety?
Very tough to answer. It depends on individual's mindset. I'm comfortable, right? So let me say this, right? In my stock portfolio, out of 35%, take a guess how many stocks I would have.
I think you have roughly 15-20 stocks, good quality stocks.
Okay. I have 65 stocks.
65.
Yeah. Do I track them? I don't track them. But those are the stocks I fundamentally believe they have been doing good. I track them once a year. I look at their top line and bottom line, and I'm good with that. I exit when they have not done well in 1 year.
Okay.
And when I know the economic conditions is not supporting them, I exit them. Otherwise, I'm good to stay with them.
So do you not think that 1 year is a very short amount of time to decide whether or not you want to sell?
Right.
What if the sector is going through a bad phase?
Exactly. So within those 65 stocks I have, right, I have a sizable portfolio allocation wherein any stock is not more than 1%.
Okay.
Maybe some stocks are like close to 2%, but not more than 2%.
Yeah.
Right?
Okay.
So which means they're not eating up my money too much. They're not denting my portfolio too much, right? It has its own minus as well. Even if they're doing great, it may not be, adding more value, but I'm okay with that because, like I said, my stocks are my retirement, and I'm good to hold on to them. Yeah.
Right. Again, I think that is why you have 65 stocks, because you're highly diversified even within stocks.
Correct.
I want to know, were you always very involved in your finances, or did that happen, somewhere in the middle of the journey where you realized that earning isn't enough and now you need to get better at investing too?
I think I would start with probably COVID. COVID taught a lot of us a lot of lessons.
Yeah.
COVID is when I realized my real estate investments were like not doing good. Now, my property was like vacant. I got to pay my EMIs, other stuff, and so on. And that's when I realized, hey, the diversification really kicks in, and it really has to, right? I realized I had to move towards diversification, and that's when I ventured markets pretty strong, right? And I want to give this number. Maybe it can help a lot of audience too. Exactly March 2020, March 11th. That was my anniversary, and markets got corrected 10%. I didn't have the guts to enter.
Oh.
Okay, and I remember the numbers as well. It was around 7,500 Nifty, and I was watching one specific video, and when this great person said it's going to go down to 6,000, so wait. I literally waited. Okay,
Yeah.
and I think maybe 6 months plus, it got a slight correction. It started jumping, and when you see the jumps, you're psychologically not prepared because your mind still says, hey, damn, you just missed it at 7,500. Why are you entering at 9,000? It might come back again. So that's where I'm again back to my original point. Timing that market is just not impossible.
Exactly.
And I want people to really understand that staying in the market is the only fundamental mantra that works, right?
Right.
You're just not beyond market at any time, right? So, yeah.
I think I relate to that so much because it's happened with me too. So I have some really good quality stocks in my watch list, and I keep on waiting for them to correct, and it just hurts so much when I'm expecting that it's going to go down and then I'm going to buy it, and it just shoots right up. And it's so frustrating. So you're right. I mean, we put in so much effort into getting the best deal.
Absolutely.
But sometimes it's just more important to get in. Right? Absolutely true. And what has been that one financial goal that you, worked for the longest? Because of course, like real estate is a sizable investment too. But are there any other financial goals that you chased for a very long time?
Frankly, I didn't chase a number.
Okay.
I don't know if it might sound a little different to you than what you have spoken to other people. I didn't chase a number. So even today in my mind, I don't have a number saying I want to touch 10 CR in next 6 years. The only thing I have in my mind is how much can I keep adding it to my portfolio?
Yeah.
Let my portfolio decide whatever it needs to give it back to me down the lane, X number of years, right? So honestly, to your question, I don't have a number which I'm chasing.
Yeah.
Saying, I mean, I know it may be good or bad, I don't know, but a lot of people are saying, hey, you got to have like 10 CR portfolio, then you're done, right? Some people might say it's 5 CR, 2 CR, whatever, right? But I don't have a number, right?
Not even for your retirement also, you don't
I don't want to have a number working towards saying, oh, okay, let me ask you this. What are you going to do with that number? Let's assume you touch the 10 CR portfolio tomorrow. What will you do? Will you retire?
Not really.
Not really, right? We will never do that. I mean, I don't want, so a lot of new concepts like FIRE. And I was just analyzing myself. I believe in FI, but not RE.
Okay.
Why? Right? Because I think fundamentally we got to keep working till we can. Simple. I think that's what it is. Whatever you love doing, and like I keep telling my daughter today, I mean, I love singing, but I'm not a great singer, right? So I might want to spend time there.
Yeah.
As we grow older and so on. But to me, I think I've never chased a number. honestly, being a financial consultant today, I don't chase a number. Probably when
Interesting. That is
clients
a
come
very
to me saying, I
interesting
want to build 1 CR portfolio, I design for them,
take.
but I don't tell them is that 1 CR great for you or not. Let
Yeah.
them decide,
Yeah.
right? See, what's good for me is not good for you, right?
Hmm.
What's great for me is not great for you.
Yeah.
Then why would I chase a
What?
number, which may be reasonable or unreasonable, right?
Right. Okay. And if after watching this conversation, anybody was to take away one key lesson, what would you want that to be?
Yeah, one key lesson definitely would be don't time the market. I think I keep saying this in every discussion that I meet up with different people because it's just not easy. You and me just can't do it, right? So not timing the market is one thing that I really want to take people away from this discussion. The reason being, for example, I just onboarded few clients like 2 weeks back when market was 26,000, and today it's exactly probably 5% lower than when I onboarded them. Is that the good thing? See, nobody expected. So when it was 26, people are talking about 27,500. Probably even those clients might ask me, Naveen, we should have waited.
Yeah.
But who can just time it, right?
Right.
So there is no such timing where someone can say, hey, make an entry now, you're going to be making X number. So staying in the market is the only best thing I can usually tell anybody who is just getting into the markets today. Yeah.
Right. Thank you for watching this video. We hope you found some inspiration in Naveen's story. What was your biggest takeaway? Let me know in the comments.
Investment in the securities market is subject to market risks. Read all the related documents carefully before investing.